I've been exploring the Bank of America customized cash reward secured credit card for a while now, and this video is my honest and unbiased review. I'll cover all the main points, from key features to risks. So by the end of this video, you'll have a better understanding of it. First, let's talk about what it offers. The Bank of America customized cash rewards secured card is designed for people who want to build or rebuild credit without paying an annual fee, which is already a big plus in 2026 when many starter cards still charge one. It requires a refundable security deposit starting at $200, and that deposit helps determine your credit limit, up to $5,000 if you qualify based on income and ability to pay. In return, you get a surprisingly strong reward structure for a secured card. Up to 6% cashback in a category you choose for the first year, 2% at grocery stores and wholesale clubs, and 1% on everything else, with a quarterly cap on the boosted earnings. Your category drops to 3% after year one, which is still competitive for a no annual fee product aimed at credit builders in 2026. You also get modern essentials like digital wallet support, mobile and online banking, security alerts, and a $0 liability guarantee for fraudulent transactions, which makes it feel like a normal mainstream card rather than a bare-bones rebuilder option. Over time, Bank of America can review your account and may return your security deposit, effectively graduating you away from a secured setup if you manage credit well, although that is not guaranteed for everyone. With that said, it's not perfect. The purchase APR is on the high side at 27.49% variable, so carrying a balance gets expensive quickly, which is a real drawback for anyone hoping to finance purchases over time. There is no introductory APR at all, and secured accounts are not eligible for a traditional new account bonus. So you miss out on the kind of welcome offers you might see on unsecured cashback cards in 2026. The generous 6% rate only lasts for the first year and only on limited quarterly spending before your earnings drop, making this card less appealing for big spenders or anyone who prefers simple flat rewards. The balance transfer fee of 5% also means it is not a great tool for consolidating existing debt, especially given the lack of an intro APR window on transfers. Overall, this card makes the most sense if your top goal is building or rebuilding credit with a major bank while still earning meaningful cashback, and you are disciplined enough to pay it in full every month and work within the quarterly cap. If you rarely carry a balance and want rewards plus the possibility of eventually getting your deposit back, it is a strong secured option in 2026. If you tend to revolve balances, or if a welcome bonus or low intro APR is more important than long-term rewards, you may want to compare this with other secured or entry-level unsecured cards before applying. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel, and don't forget to hit the subscribe button. We'll see you in the next one.